Hey, how are you today? This is Josh Patrick, and you're at Cracking the Cash Flow Code. And my guest today is Ruth King, and we are in for a treat because Ruth is an expert at helping contractors manage their cash flow in cash and create profit into dollars they can actually put into their pockets, which is something that our friends in the construction business really need. Now, for me, this is a real treat having Ruth on today because we often get people who are generalists in the world of management, but this is one of those great times where we get somebody who actually specializes in working with blue collar business owners, and there's nothing more blue collar than a contractor. So let's Ruth on. Oops, and we'll start the conversation. Hey, Ruth, how are you today?
I'm doing great. How are you, Josh?
I'm doing well. And so tell me, let's start with cash flow. How do we manage cash flow or what's the biggest mistake that contractors make when it comes to cash?
It's very simple. They don't check their bank account every single day.
It's really that easy?
It is that easy. Now, obviously, there's the profit piece of it and everything else like that. But the most critical thing that you absolutely need to do is check your bank account every day. And I'll tell you why. One of my clients, bookkeeper, was looking at the bank account every day. The owner never bothered. He said, "Okay, Andrew's taking care of it, so be it. I don't have to worry about it." And one day he noticed these two little deposits. One was like 22 cents, the other was 70 some odd cents or whatever it was. And he thought, the owner is just, setting up a new account somewhere or whatever else it is. So the next day, get a phone call from the bank. Somebody was trying to withdraw 50 grand out of their bank account.
That's not a very good day.
No, well, they caught it. That was number one. But the
Yes.
reality was, had he been looking at it rather than the bookkeeper, he would have said, knowing his personality style and how he likes to talk about language, he would have said, "What the blank is this?" And he
Yep.
would have called the bank and they would have found out what it was and they would have immediately shut down his account. All right. So it takes you 5 minutes a day to look at your bank accounts. All right. And you can be in your office, you can be on vacation, you can be in Hawaii, you can be in Europe, you can be anywhere in the world that has a place that you can log onto the internet and look at your bank account. So no excuses for that. And the reality of it is not only would he have caught that little 2-cent thing, but you as a business owner can see all the deposits, all the withdrawals, all the ACHs that are going in and out. And many, many, many times embezzlers know that you never look at the bank statements. So they write checks to themselves or they do ACHs to themselves or something like that because you don't look at the bank statement. It really and truly is the first line of defense, and so that is the, fundamental basic thing that you've got to do first. All right. So that makes sense?
It makes a lot of sense. I've been doing that for a zillion years. My father taught me 45 or 50 years ago about a concept he called checkbook accounting. And essentially, checkbook accounting was if your bank balance is growing, you're doing well. If it's not, you got a problem.
Well, that's not exactly right either.
No, it's not. But in the vending business, it actually was right.
Okay. In the vending business, it is because you're in a situation where everything's cash.
Yeah, it was a cash business. So
Yeah.
we could tell by that. And it's not, I mean, it's certain in a construction company, it certainly is not the thing you need to be looking at.
Right. And I'll give you another story about that one. Two contractors started a business together. They grew it from $0 to $2 million in 12 years. They only looked at their checkbook, i.e. checkbook accounting. And as long as the company was growing, they always had cash finishing one job to start the next job, and they always could pay their bills. They took their discounts. They didn't have any problems paying payroll or their vendors or anything along those lines. And they hit $2 million and growth stopped. Literally just flattened out. And so they started not being able to take all their vendor discounts every once in a while, having problems making payroll once in a while. And they're like, "Hey, we've always had cash. We're a $2 million company. This shouldn't be happening." Well, they were smart enough to get some help. So they called me on the phone. And a long story short, they were losing a nickel for every dollar they took in the door for 12 years. Now,
what are they losing a nickel to? You mean as far as profit goes?
No, what they were doing is they weren't pricing their products, pricing their construction products high enough. And they
I
never
see.
saw it because the money from one job did the next. They never looked at a P&L to see whether they were profitable. They're only looking at cash. All right. Profits and cash are two totally different things. You can be profitable and have no cash in the bank, and you can be having a loss and having a lot of cash in the bank. Now, you can't have losses for very long because the cash in the bank will go away. But the reality is,
Unless your name is Amazon, then you can do it.
oh, yeah. Amazon's not a contractor, okay?
You're right.
So you're in a situation there. I mean, it literally is, they didn't pay attention to inventory, cost of goods, how much time the guys are actually spending doing the work. If they bid the job for 16 hours and it took 20, who knew? Because all they cared about was cash flow. Did we have enough cash in the bank to pay our bills, take our discounts, pay payroll? That's it.
I mean, and even a P&L is not enough for you to look at. If you don't have a cash flow statement, and for those of you listening who don't know what a cash flow statement is, the first thing you need to do, in fact, stop listening right now, get on the phone, call your accountant, make an appointment.
Call me. I've got one.
Call Ruth, and she'll teach you how to read a cash flow statement. Because the truth is, if your business is growing, which is what your contractor example was, it covers up for a whole multitude of sins until you stop growing. And you'll never know that unless you're looking at a profit and loss statement, a cash flow statement. If you really want to get fancy,
and a balance sheet.
Start a balance sheet, but start doing P&Ls on your jobs.
Yep. I have a template that they can use. I'm happy to share it with them. I have a weekly cash flow report that they can use, and I'm happy to share it with them. If you find me, it's ruthking.info, not Ruth King.
Oh, I'm sorry.
So
let me change that.
Yeah. So I'm happy to share it with you. The really interesting part of all of this, I love working with contractors. You are all really, really smart people. You care. And I hate seeing you, work your butts off for no cash and no profitability. The thing that I use, quite frankly, is I don't believe in percentages, which Josh is probably something else we should talk about. I believe in numbers. So like at the end of the year, if you have a 10% net profit or 5% net profit, whatever it is, you can't go to the bank and go to the teller and say, here's my 5% net profit. Will you deposit it in my account? The teller will look at you like, what the, what's going on here type thing. So what you truly can manage and what you truly can count is dollars. All right. So I look at it for every billable hour, how much drops to the bottom line. All right. And I'm not talking about total hours because your guys have vacations, holidays, training, meetings, whatever else it is. I am talking about every hour you can bill a customer for. Okay. That's it. Only billable hours. And it's never 22,080 hours a year because you pay for vacations, you pay for holidays, you pay for sick, some of you, and stuff like that. And, most of the time when we start making this calculation the first time, a lot of times it's like $4.17 an hour. I had a $4 million contractor who I went in to try and help. And when we did the numbers, he was, $4.17 an hour. He goes like, oh my gosh, because you don't realize it because you only care about the percentages. Start looking at the dollars. Right?
Yeah, I'm going to push back just a little bit. I think you need to look at both.
Why? I can show you a contractor both of which had 10% net. One was earning 10 and one was earning 50 net profit per hour. Which would you rather be?
Well, I think you need to do both. I really do. I think that percents are important because those tell you what you're doing as a percent of something, and dollars are what you spend. So I agree with you need to look at dollars. I also would say you need to be looking at percents, and you need to be looking at the changes where your cash is coming from.
Okay.
More importantly, what you really need to do is have a dashboard.
Yeah.
And that dashboard needs to tell you a whole bunch of stuff. So I know what I put on my dashboards. What do you put on your dashboards, Ruth?
I put on revenue.
Yeah.
Gross profit. Yeah. Not gross margin, gross profit.
Yeah. Okay.
And the reason why I don't use gross margin is because it's a percentage again. I can show you
Yeah,
two jobs.
I look at both. If you're not looking at percents, I'm going to tell you,
Okay,
you got to be looking at both.
I will tell you, and I will show. I mean, and we can go offline and talk about this. I can show you two jobs, both with 40% gross margin. One made $73.37 an hour. The other lost $21 an hour. They paid the customer same gross margin. I can show you a 19% gross margin that netted 52, and a 64% who netted 48. Margins don't matter.
Yes, they do.
Okay.
They do.
You and I have a disagreement
I'm
about
going
that.
to tell you, we're just going to agree to disagree on this.
Okay, that's fine.
It's, and the other thing you want to be looking at is, and again, I am, and we're probably going to disagree on this also, but the truth is, if you're charging by the hour for anything, you're limiting how much money you can make in a very serious way.
Yep, I agree.
So when you look at what I look at is we look at efficiency per hour that people spend. In other words, if I'm paying you for 40 hours a week, how much of that time are you actually working?
I call it a productivity ratio. Same thing.
Yes. And for me, that is a hugely important thing. I see a lot of businesses, a lot of contractors where their efficiency ratio is 50 or less. And the truth is they just don't really know how they're doing. The other thing about dashboards, which I think is really important, Ruth, and again, we may disagree a bit on this, is that for me, most of the information we put on dashboards is what's going to happen to the company in the future,
Mhm.
not what's happened in the past.
That's
So
right.
I don't really, I mean, it's important to track gross margin. It's important to track what I've done per hour. It's important to track all that sort of stuff. But I also need to be knowing what is my backlog? And if I'm
Mhm.
not tracking backlog and I'm not making sure that it's staying at an appropriate level, I could run out flat out work 90 days down the road and not even realize it's going to happen.
Yep. I had a contractor whose backlog was really, really high, and he said, "Oh, good, I don't have to bid anymore." Well, when we actually analyzed his actual sales cycle, it was 90 days. No, it was 9 months, excuse me. And so he ran out of work because he stopped bidding, saying, "I'm too busy," which was crazy, which is insane. So the
Well,
other thing,
that happens with that happens with almost every business you run across is that they have hills and valleys in how they run their company. They
Mhm.
get busy. They sell, get a bunch of work, and then they forget to keep selling, and then they do the work, and then they run out of work, and they're back in zero, and then they got to go sell, and it becomes a repeating cycle, which is a real pain in the neck. If a construction company has a sales process, that won't happen.
correct. And then have a marketing process. That will not happen. So
Yes,
both of those.
although yeah, I have this thing about sales and marketing. I think they're very two different activities.
Mhm.
Marketing creates awareness of who you are. Sales actually creates a customer who will pay you money.
Yeah.
So
Marketing's job is to actually produce a lead for the salespeople, and the salesperson goes and closes it. Marketing
yes,
says, "I'm interested." Salesperson goes and closes it. It's sales is the last step of marketing. The other thing I would put on the dashboard is this is probably not appropriate for all contractors, but if you have maintenance agreements, if you have maintenance plans, if you're plumbing, electrical, HVAC, pool and spa, generator, what am I missing?
we have a security company that puts
Security.
on their
Yeah.
we track how many people they gain and how many people they lose every week for monitoring,
And also
which
how
is
many are up for renewal? Well,
yeah,
monitoring
they
is,
don't really do it.
yeah,
They do
they don't do
automatic
renewals.
renewal. Then you don't
Yeah,
have renewals. They just keep going.
yeah.
But it's still we want to know: are we gaining? Or are we losing for that recurring revenue piece?
Mhm.
And what can we do to make that a little bit stronger?
Yep.
So I think you're absolutely correct. And if you don't have a maintenance program, you need to put one in your company.
Yeah, absolutely. We
You,
yeah,
you-
maintenance is really evens out your cash flow. If nothing else, one of the things I try to do, if at all possible, and sometimes it's not, is have maintenance cover the entire overhead of a company. So you never have to worry about cash flow at that particular point
yeah,
because you know that your overhead is always covered by maintenance.
yes. So when you measure productivity, go
Mhm.
back there again, which is what we ask people to do a lot of times. You say, okay, let's take your total work that you had and the total amount of hours that you spent, and that gives you your productivity per hour. Is that sort of what you do, or you do something different?
Now I look at how many billable hours did you have versus how many hours did we pay you? Same thing.
Yeah. Well, we do like say we brought in $5,000 worth of work, and we had 200 hours. We would divide 200 by 500 to say this is what our utilization is per hour, and then we compare that with our average hourly wage is, and we're typically looking for 3 or 4 times hourly rate as their average.
Yeah, I don't do it on the sales side. I do it on the profit side.
Okay.
It's not necessarily what you bring in, it's what you keep. At least that's my philosophy.
Well, that's true, but I mean, again, if I'm looking at direct labor
Mhm.
and I'm getting 4 times my direct labor cost, and I'm getting a reasonable markup on materials, there's a pretty darn good chance I'll be profitable.
I agree. I agree. I mean, you've got to know your numbers. You got to know your ratios one way or the other.
Yeah.
And I look at it. And I do the job costing. So I say, okay, this is what the revenues were. This is how many hours it was. This is material costs. This is equipment costs. This is permits, overhead costs, and everything else like that. And you end up with the net profit per hour. What was it? Did you make money or not?
Yeah. That's very simple. One of the things we like to see people do in the contracting world is to put some sort of a process in place where they improve their productivity on an ongoing basis. A lot of people look at, Six Sigma or Lean, but that's way too complicated for
No.
contractors.
Here's what you do. And it's
Yep.
real easy. I mean, we
And
do
then,
this all the time. All right, you have a poster board. Yeah, I'm old, okay? you put a dashboard up some way, shape, or form that everybody can see, and they can post what the compensation percentage was this week, last week. We can do it by department, we can do it by company. This is how many hours we paid. This is how many billable hours we had. What's the percentage? And you put it up. If it's under 50%, we have a problem. It should be somewhere north of 80, preferably north of 90.
and well, what we do, I mean, that's great for historical stuff. What I'm looking for is how can I have a process where we continually improve and continually make more efficient what we're doing out in the field. And what we use for that is a methodology called Scrum, if it's a
Mhm.
big enough project. Now, if you have a $10,000 project, using Scrum is a real waste of time.
Okay.
But if you have a project that's 50, 100, $200,000, and you're not using something like Scrum or Scrum like something, you're leaving a ton of money on the table. And one of the questions I like to ask I ask manufacturers this too. I say, how would you like to decrease the amount of labor it takes you to do a job by 40%?
Yeah, and Scrum can do
And
that. Yeah, you and I had that conversation offline, and I looked it up,
yeah,
and it's like you can do it. It's easy. Well, it's
yeah,
not necessarily easy. It is
it's
putting all the
simple.
data in. It's simple to use, and you just have to do it.
Yeah, it's not. There's a lot of stuff in the world that's simple but not easy,
Yeah.
and that's one of it. In the not easy part, at least in my experience, is changing habits of people. The idea of having a 10-minute meeting in the morning, people just start saying, "Oh, we don't need it. We'll skip it." Well, you do need it. That's the reason. That's how you get to that great productivity. Or, gee, I think we're going to skip a retrospective, which is I'm going to look back over the last 2 weeks and see what we did great and what we could have done better and make adjustments for the next 2 weeks. Or I'm going to look at, gee, what stuff doesn't really have to be done in a project. We just had our deck redone in our house, and I have to tell this story. They spent a month on it. Now, they did have a whole bunch of rain days, but we could have taken 3 days out of the project if they had used Scrum.
Mhm.
And I called up the guy who owns a contracting company. They have 20 employees. I said to him, I said, Ryan, I'm going to give you a present. I said, I will give you 2 free hours to explain to you how you can decrease your labor cost by 40%. And what do you think he said to me?
If he was smart, he should have said, "How do I do that?"
He
He
said,
may not have been smart and said, "No, I don't need to.
no, he said, I'm too busy.
I'm too busy."
And if you're too busy, and this is something I think is a huge big deal. If you as an owner of a company and you have 20 employees and you're too busy to figure out how to take 40% out of your labor costs, I feel sorry for you.
Mhm. I find that people don't change until something happens to make them change,
Yes.
i.e., you know, they run out of cash.
Yep.
A client doesn't pay them. They
Yep.
lose a very significant, important person, manager in their company. Somebody who has been in that position dies. Um, and I've seen that happen a lot. You know, somebody who has all the knowledge here
Yep.
instead of in where it is, and he's gone. And all there are yellow pads, yellow legal pads.
Yeah.
In a world of hurt. But that's
It-
when people start changing, is when
yeah.
something bad happens. Other than that, as your contractor said, I'm too busy.
Yeah. They don't have a good compelling reason. That's the reason why.
Mhm,
We call that scratching the itch, which
mhm.
is, if you walk in my office and I don't scratch your itch, you're never going to talk to me about what's really important for your company.
Yeah.
So if you're an advisor and happen to be listening to this, remember that when someone walks in your office and they own a business, they walk in for a reason. They didn't walk in because they had nothing else to do. And you better find out what that reason is and scratch it, or you're never going to get to talk to them about what you want to talk to them because they won't stick around.
Well, we can flip that around to the contractor side. I know I totally agree with you there. But somebody's calling your company. They're not calling you because they want the time of day. Yes, there are salespeople who call. I'm calling about a potential customer. They're
Yeah.
calling you because they have a problem, they have an issue, they have a whatever else it is. And if you don't take care of that issue, they'll go call somebody else. I mean, how
Yes.
many times do people call you and say, how much do you charge? They're not calling you because they want the time of day. They have an issue. The answer to that question is, who am I talking to? And make sure you get their name first. And it's like, Mrs. Jones, it sounds like you're having an issue with whatever. If they're calling a
Yes.
plumbing company, and it sounds like we're having an issue with the plumbing in your home. Is that correct? Well, can you tell me a little bit about it? And then you can get a service call or get a project or whatever else it is. Do not answer the question.
Yeah.
Same thing.
Right.
Just turn it around.
So, Ruth, unfortunately, we are out of time.
I'm sure.
Yeah, it always comes short. I am very impressed with what you do. We have a difference in methodology potentially, but at the end of the day, we're both probably going to get to the same place.
Mhm.
So I'm going to hope that some folks are listening to here will want to talk to you who are contractors. So how do they find you, Ruth?
Best place to find me is literally ruthking.info. All my
Okay.
contact information is there. I'm happy to, talk to you by email, talk to you by phone if you got a quick question. If you want the weekly cash flow report, I am happy to send it to you. If you want the job cost template, I am happy to send it to you. So, we're trying, both Josh and I are trying to make you more money. We may be going at it a slightly different way, but we're both have the end in mind for you to be, have more money, have more profitability, have more cash flow, so that you can achieve the goals you want to achieve. So that's how you get
Cool.
me. Yeah.
Cool. Great. And I have two things I would like you to do. First, and this is really important for the podcast, please go to wherever you're listening to this podcast and give us an honest rating and review. If you love us, give us a 5-star review. If you hate us, well, less than 5, but I hope you love us, and that's how it is. But make sure it's honest.
Mhm.
And the second thing, which also has sort of something like that, is we have I just came out with my second book. It's another parable. And it's called The Sale Ready Company. We follow our friends in the Aardvark family again as they go through. And this time, John is getting ready to transition out of his business. And he's trying to figure out how to get out, afford to be able to leave, who to leave the business to, how to leave the business to. We have lots of fun twists and turns in the book. And you can get it for half price. It's really easy to do. All you have to go to www.salereadycompany.com and you get to buy the book for $7.95. It's normally $15. If you buy the book on our site, you also get a chance to sign up for our bonus section where you'll get ebooks and worksheets and checklists on all the strategies and tactics that we talk about in the book, but we don't go into in detail because this is actually a story and you want to read the story. So this is Josh Patrick. You're with Ruth King. You're at Cracking the Cash Flow Code. Thanks a lot for stopping by. I hope to see you back here really soon.